Hi, welcome back to my channel. I am Danae Wolf. I am a virtual CFO. So what exactly does that mean? It means that I help entrepreneurs gain financial clarity. So I'm here to break down all things business finance, from your profit and loss to your balance sheet. I want to simplify it and make sure that you feel empowered around your financial data, because I want you to use that information to make operational improvements in your business. I believe that if you don't know what's going on in your bank account, you don't know what's going on in your business, and we can't have that. So that is really my focus, and my goal is to empower you to understand your business finances. Now, lately, I have had to pivot because I believe the best way that I can serve you right now is to keep you informed on all things COVID-19 stimulus. There have been a lot of different options provided from the government, and it can be really overwhelming and really confusing, and it's constantly changing. So that has been what I am focused on. That is what you will find updates on in this YouTube channel. And also check me out on my Facebook group called The Profit Factor, and there will be a link below for you to access that. Now, today, we are talking about the most recent PPP updates. PPP is, of course, the Paycheck Protection Program. Those updates came out today, June 17th. Okay, so it is 2 p.m. Eastern Standard Time, June 17th, 2020. Just want to throw that out there because things are changing so quickly that if you watch this video at a later date, it may be outdated. The information might not be valid anymore. Also, just want to throw out full disclaimer, not a lawyer. So if you really want to make sure that you get advice specific to your situation, please speak to your CPA or your legal counsel. Not a lawyer, not your CPA. So this is simply for educational purposes. This is me reading the documents, which I'm going to show you how I accessed them so that you can read them for yourself. But this is me reading them, interpreting them, and then giving you my opinions on them. So I just want to throw out that disclaimer. Now, I do want you to know how you can get this information yourself, because I do encourage you to read it yourself. And I think too, there is so much misinformation out there. So it's really important that you guys know where you can get the official sources. So let me share my screen with you really quickly. And you are going to head to treasury.gov, and you are going to click on this red link right here. When you click on the link, you are going to scroll down, and you are going to see all of the information in regards to the Paycheck Protection Program. Now, for today, we are looking at the interim final rule dated June 17th. And if you click that, here is the document. This is what I read this morning. It is 13 pages. Kind of boring. I wouldn't read it if you're tired, even remotely tired. But this is what you can reference. So if you have any questions in regards to anything I say on today's video, you can, of course, search this document, and then also check me out on Facebook in my group, The Profit Factor. I am answering questions in there 24/7. So please feel free to join the group and follow along. All right, so let's get into some of the changes that have taken place. So what happened is on June 5th, President Trump signed the Flexibility Act. So the Flexibility Act is what took some of the bullet points of the Paycheck Protection Program that most entrepreneurs had an issue with. Okay, it wasn't really working for a lot of businesses. So they listened to you and they made the changes with the Flexibility Act. So when they announced that act on June 5th, there were still a lot of questions. And if you guys have been following along, you know that they tend to release updates, but they don't kind of give you all the information you need. So every time they release an update, we kind of have more questions. So that's what happened with the Flexibility Act. And they released one update, I think like a week later. And now here's the next one today. Now today's did answer a lot of questions. So that's what I really want to get into. All right. So I have some notes here. So you guys are going to see me looking over here. I am looking at my other screen because, again, read this morning. So don't have this memorized. Definitely don't want to forget anything. And full disclaimer, I have a 2-week-old, so I'm running on fumes. So if I don't have notes, I'm going to forget to tell you guys stuff, and I don't want to do that. So here we go. Very first thing I want to touch base on. So this loan was initially, the Paycheck Protection Program As you guys know, you can apply for forgiveness, and if we do it correctly, we're going to get most, if not all of it, completely forgiven and not have to pay it back. But for the portion that we would have to pay back, it was a 2-year term with a 1% interest rate. As of June 5th, it is now still a 1% interest rate, but it is a 5-year term. So what that means is it's going to lower your monthly payment, which is great for cash flow, which is probably one of the biggest issues facing businesses right now. So by them expanding that 2-year term to a 5-year term, your monthly payment is now going to be lower. So anyone who has gotten the PPP loan after June 5th, you're automatically in that 5-year window. But for those of you who already got the loan, me personally, I already got the loan. I got it at the end of April. So for us, it does say that you can extend to the 5-year term if it is mutually agreed upon between the borrower and the lender. So what this means is you would have to reach out to your lender who gave you the PPP loan and say, I'm aware that with the Flexibility Act, I can expand my term to go from 2 years to 5 years. Are you guys okay with that? My assumption is most lenders are going to approve this, but they didn't say it was mandated. It says it has to be mutually agreed upon between you and your lender. So those of you who know that maybe you haven't been using the PPP loan appropriately, you think that maybe not all of it is going to be forgiven and you're going to have a loan and you received it prior to June 5th, I would get on the horn with your lender right away. Let's send an email, let's make a phone call, send a smoke signal, whatever you need to do to say, hey, how can I take advantage of the 5-year term? And hopefully you have a lender who is totally fine with that. Okay, so the next thing I want to dive into is initially we had 8 weeks to spend this money. Now, what happened was, they started making these loans in April. If you guys are watching the news, you know that most small businesses are just now starting to open. So when this loan was coming out in April and they're saying, well, you have 8 weeks to spend the money on payroll and rent and utilities, entrepreneurs were saying, well, I'm not open. I don't have any payroll right now. My staff's on unemployment. This would really help me in a couple of months when I open back up. So they heard you, they listened, and they made the change. It's now 24 weeks. And what they've said is if you are someone who is already in your PPP loan, you can elect to have the 24 weeks. So if you still want to keep 8 weeks and you're like, no, I already have it all mapped out and planned and I'm ready to apply for my forgiveness, they're saying that's fine. Stick with your 8 weeks, but have the option of going to 24. So you really want to make sure that you look at your specific situation. When did you open? What are your dates? And would 24 weeks make more sense? Or is the 8-week going to make more sense? Now, the next thing that they did that is important to discuss is initially this loan, we had to spend 75% of it on payroll. And then you had a 25% cushion that you could spend on business rent, utilities, and business mortgage interest. Let's say if you happen to own the building where you operate. Now they have lowered that threshold. You don't have to spend 75% on payroll. You can spend up to 60% on payroll, which is going to leave you a whopping 40% if you are someone who happens to have really high rent. I know that I personally have spoken to a couple of entrepreneurs in malls. Those of you operating in a mall know that, rent in a mall can be astronomical. And they particularly were struggling because they're like, my staff's on unemployment. I'm not open at full capacity. I don't need to spend 75% on payroll, but I have, a $15,000 a month rent that I really need to get covered. So again, they heard you, they listened, they made a change. So this is a positive change. Now, when they released this on June 5th, the terminology did seem to imply that if you did not spend 60% on payroll, you weren't going to get anything forgiven. So what I mean by that is, let's say you spent 59% on payroll, 0 was going to be forgiven. They have now clarified that is not the case. So we don't have to worry about that happening. You can spend up to a minimum of 60% on payroll. If you want to spend 100% of it on payroll, that's fine. But again, our only forgivable expenses here are going to be our payroll, our business rent, business utilities, or business mortgage interest. Now, one of the big sources of confusion, especially when it comes to calculating in regards to this loan, was when the forgiveness application was released. And oh my gosh, all my dates are blurring together. Remember, I have a 2-week-old. I'm not really sleeping. At some point, they released the forgiveness app. This was like weeks ago. And there are a bunch of calculations for how we can make sure that we are maintaining our full-time equivalents. Now, if you guys remember, a full-time equivalent is a process of calculating, how many people do you have on staff that are working 40 hours, was considered 40 hours. And then those who weren't working 40 hours, we could either, do an equation to divide it by 40 to see, how many actually worked it, or you could just blanket them at 0.5, count them as a 0.5 FTE. There were 2 different equations for how you could calculate it, and there's 2 different look back periods. And if you head on over to the Facebook group, my private group there, the profit factor, we get into those equations pretty in depth. But there was this clause that said, hey, if you cannot get back to, let's say you did the equation and your FTE was 10, you had to have 10 FTEs on payroll during your 8-week period, which is now 24. Let's say that it was 10 people you had to have. They created this safe harbor that said, hey, if you bring your staff back, or not even the original staff, you could hire someone else. But if you get back to that FTE by June 30th, and if you bring back their wages and salaries by June 30th, you don't have to stress if during that 8 weeks you didn't pay the correct amount of people. So again, there is a rule in the Paycheck Protection Program that says that you have to maintain your full-time equivalents, and they have to maintain their wages within 25% of what they were normally getting paid. So let's say that number is 10 people and they were all getting paid $10 an hour. That's what you have to maintain. Well, let's say during your term of your PPP, whether it's your 8 weeks or it is your 24-week term, whichever you decided on, let's say that you only had 8 people working and you brought them all down to $9 an hour. Initially, they said, that's fine, but if by June 30th, you bring them back to 10 people on payroll at $10 an hour, you're covered. We're not going to penalize you. They're now saying you have until December 31st to do that. So again, another situation where they heard you and they listened, because so many entrepreneurs have been vocal about the fact that it's not realistic to bring back your full staff when your revenue is down by, 20, 30, 40, some of you 50, 60%. It's not realistic to pay your average wages when, again, revenue is down 20, 30, 40, 50, 60%. So June 30th was too soon. We know that most states have just started opening recently in the last couple of weeks. So business owners are playing catch up, right? Most of them are behind on rent. They're behind on bills. They're not in a situation where they can afford to be at their pre-COVID staff headcount and pre-COVID staff wages. So the government listened. They heard you and they've said, okay, December 31st. That's huge. That's huge. So you have about 6 months to get back to where you were. This is a really, really, really positive change. And it also is going to make your forgiveness process much easier, which we'll get into here a little bit at the end. But if you can qualify for this safe harbor, because now you have until December to achieve this, which is really, really, really great. Again, like I said before, it was June 30th. We are now getting an extra 6 months to bring up that headcount and those salaries. And again, to reiterate, during your PPP, if you are not paying people at the normal wages and you're not paying the correct number of heads, you don't have to stress about it as long as you know that you're committed to getting everybody back on that payroll by December 31st. Okay. So the next thing to discuss, and this was something that was asked a lot. Okay. So the Flexibility Act gives you the opportunity to go to 24 weeks, right? So after June 5th, your loan's going to go to 24 weeks. But if you were before June 5th, you have the option. Well, a lot of people wanted to know, what does this do for owners' pay? Because if you guys remember from before the Flexibility Act, the way that business owners were being compensated through the PPP is they were saying, you are going to take your tax return, take a look at Schedule C, line 31, and you are going to divide it by 52 and multiply it by 8 so that you get 8 weeks of payroll with a maximum of 15385, because that would be 8 weeks equivalent of $100,000. And if you remember, they said no one, not the business owner or an employee, could make more than $100,000 off the PPP, right? So they're willing to pay you your standard wage up to a max of $100,000. Now, if they had said it's going to be $100,000 divided by 12 multiplied by 2, we would have actually gotten a little bit more money for those of the high earners, the ones getting to 100,000. But they specifically are saying divided by 52, multiplied by 8. So it caps you in at this 15385 number. And they have said that, business owners cannot take more than this. Employees cannot take more than this. They have also said that if you're not at the max of $100,000, so let's say you divided it by 52, multiplied it by 8, it was, I don't know, 15,000, 14,000. You didn't quite make 6 figures last year. Let's say it was 14,000. If that is what it shows on your Schedule C, line 31, as the business owner, you cannot be paid more. Now, your employees can. You can give your employees a bonus. You could pay your employees hazard pay. But you yourself as the entrepreneur, you cannot get paid more. So a lot of you are sole proprietors who don't have any staff, who don't have any rent or mortgage interest or anything like that. You don't have any of the extra expenses that are approved. So you get this loan, which if you guys remember when you applied, it's 2.5 times your payroll, right? So there's extra pay in there. So when they're saying, hey, you can only take line 31 divided by 8 multiplied by 52, most of you sole props had money sitting in your PPP that you couldn't use because you could not pay yourself that difference, right? Now, with this ability to go to 24 weeks, what they're saying is you can take line 31, you can divide it by 12 and multiply it by 2.5 with a max of 20,833. So if your PPP loan was calculated correctly, which means that when you applied with your lender, you guys took a look at 2019, line 31 on your Schedule C, you divided it by 12 and you multiplied it by 2.5. If that calculation was done correctly, as a sole prop, you are going to 100% get your PPP loan forgiven. This is huge because that was not the case a couple days ago until this came out. Now, they're not addressing owner employees, which is a term they kind of dubbed on their own, owner employees. So an owner employee would be someone who is an S Corp, a C Corp. You guys are taking payroll through your payroll company. Maybe you use Gusto or ADP. You are actually being paid by a paycheck in your business. So they are not giving that calculation for S Corps. My assumption, and again, full disclaimer, my assumption, my educated guess here is that this same $20,833 is going to be the max, even if you are an S Corp or a C Corp. But hopefully we get more information on that. But right now, it does not. They're simply talking about those of us who are a sole prop or an LLC who file a Schedule C. So when you take a look at your 2019 tax return, again, you look at Schedule C, line 31, that number should have been divided by 12, multiplied by 2.5 to equal your total PPP loan. That should have been the total amount that you get. If that is the numbers that you got, then you are definitely going to want to elect for this 24-week period. If you've already gotten, your PPP loan, again, if you're getting it now, it already is automatically 24 weeks. But you are going to get 100% forgiveness, which is really, really exciting. And my assumption is if you are an S Corp, C Corp, if you are a business owner who pays yourself through ADP, Gusto, some type of a payroll company, and you do 24 weeks, your max is $20,833 that you can take. And your 8-week max is $15,385. Now, what they did say, and let me find it here in my notes. So if you have employees, right? If you have employees, again, the calculation is a little bit different. So what they're doing here is saying that if you are an employee, so not an S Corp employee, like if you are paying your employees, right? What they have done has said that you're going to take $100,000 divided by 52. Hold on, let's see here. $100,000, and I'm doing this math on my calculator here, divided by 52, and we're going to times that by 24. So making the new maximum forgiveness cap for individuals for 24 weeks. So again, they are putting it in a situation where, and we can pay our employees more, but the business owner cannot. The business owner is going to be capped at $20,833. Okay, so let's move on to the next thing. And just to kind of throw out there in regards to the other expenses, your mortgage interest, your business rent, your utilities, none of that has changed. And for the 24-week period, again, they're using that if it's incurred or paid rule, which means either you physically paid it during the 24 weeks, right? Or you actually incurred it. So let's say, for example, your 24 weeks ends on a Friday. Let's say your payroll started on a Tuesday. So you had Tuesday, Wednesday, Thursday, Friday. You incurred those payroll costs, but you obviously haven't paid it yet, right? Because your PPP ended on Friday. Your payroll started Tuesday to Friday. It's not like you cut a payroll in between that time. You can still use that for forgiveness. You can still apply for forgiveness and count it because it was incurred during the 24 weeks. So we can either pay it or incur it, which really opens the door, frankly, for us to be able to pay stuff more than 24 weeks. I mean, if your math adds up and you make a rent payment a little bit in advance, right, during that 24 weeks because you have the funds in the PPP, based on the way this is written, that's going to be forgiven because it's paid or incurred. It doesn't say, it has to be both. So that by using the word or, it does open the door that you could probably pay things in advance, which again, this is a positive change. I think a lot of what I gather from talking to so many entrepreneurs is there is a big source of frustration about how much things have been changing. And I get it. As a person who has to keep reading all the changes, like, believe me, I get it. It's so frustrating. But I'm hearing a lot of, they're making changes because they don't want us to get forgiven. That is actually not the case. They are making changes because they're listening to you. They hear you and they're taking the information and running with it. And they're making changes based on your feedback because they want you to be able to be forgiven. So I know that it's frustrating and we're like, oh my gosh, I'm in week 6 and they keep making changes. And it kind of seems like they're trying to screw you. But they're not. If we actually look at the changes they're making, they are making it easier to get forgiven. So here is one of the most exciting things that came from this update today. And at some point, I'm going to have to do a video and really dive into this with just a more in-depth look. But if you guys remember from a couple weeks ago when they released that God-forsaken forgiveness application, it was a bear. It was a bear. There was just so much. I mean, honestly, I worked on putting together a calculator, and I kind of threw in the towel. I mean, my baby came early and there was other stuff going on, but I was just kind of like, no, thank you. The application was crazy. So what they've done is they have released an easy form. This is a way easy application that is going to make your life so much better. Now, the big thing with this, and let me pull up my notes. So if you want to use this easy form, okay, this easy application, and what I'm going to have to do is in the comments below here on YouTube, I am going to put the link to this easy form application with the directions. And at some point, I definitely will film a video to kind of break it down. But what they're saying is that you can use this super easy application if you are self-employed and have no employees. Okay, so that's one thing, which thank goodness, because for a lot of you guys, I mean, that really gruesome application, it just didn't, it did not apply to you. It didn't make sense. It was really going to be a waste of your time. So they have said you don't have to do it. So now here is the really exciting part, and bear with me here because I'm trying to open up a link because I want to show you guys how this is going to work. But basically, step one is if you are a sole prop with no employees, you can use this easy form. And if you are not a sole prop and you have employees, you can still use it if you meet the following. Okay. So it says you did not reduce salaries or wages by more than 25%. Okay. And you did not reduce the number or hours for your employees. Or you experienced reductions in business activity as a result of health directives related to COVID-19. So if you are a restaurant, okay, let's use that as an example, and they're telling you, as most states are, you can only operate at 40% capacity, 50% capacity. Then you're like, hey, due to the social distancing and the health guidelines, I cannot operate at 100%. Therefore, I wasn't able to bring my staff back. This is a safe harbor. So you are protected. You can then sign off on these to say, hey, I was affected by that. And now you get to use the easy form application. This is literally, like, I don't know if you guys can tell how excited I am about this, but this is huge, especially because I know I'm probably going to be helping 99% of my clients with this application. So I'm like, oh my goodness, being able to use this one-sheeter is like, it's going to be amazing. So let me show you. I just want to show you my screen. Give me 1 second here. Okay, so what we're looking at right now is the checklist in order to be able to use this easy form. Okay, so I just want to kind of highlight the points here because this is really what we want to strive for. Okay, I want you guys to follow these rules so that you can use this easy form for forgiveness. Okay, all right, so you, the borrower, can apply for forgiveness for your PPP loan using this form if you can check at least one of the 3 boxes below. Okay, so again, if you can check at least one of the 3 boxes below. Okay, so the first box says the borrower is a self-employed individual, independent contractor, or sole prop who has no employees. Okay, so you guys, you know who you are. The second box says the borrower did not reduce annual salary or hourly wages of any employee by more than 25% during the covered period or the alternative payroll covered period as defined below, compared to the period between January 1 and March 31. For purposes of this statement, employees mean only those employees that did not receive during any single period wages of more than $100,000. So if you know You didn't cut anybody's pay by more than 25%. You can check that box. And now you're done. You have your safe harbor. You can use this application. Now, the next thing, it says, and the borrower did not reduce the number of employees or the average paid hours of employees between January 1 and the end of the covered period. The covered period, again, if you're going to be 8 weeks versus 24 weeks, but who were employees on February 15th, if the borrower is unable to hire similarly qualified employees for unfulfilled positions on or before December 31st. So what is this all saying? So it's saying in that first paragraph there, we didn't reduce anyone's salary or hourly wages by more than 25%, right? And then it says we did not reduce the number of employees, but, okay, if you did, you had two options there. You were unable to find similarly qualified people. So that's a big get out of jail free card, right? You can say, hey, I did try to hire, but I couldn't find anybody to meet the position. You now have safe harbor. Or you can say, I have them back to it by December 31st. You have safe harbor. Now, the third box here is the borrower did not reduce annual salary or hourly wages of any employees by more than 25%. But this looks like it's the same thing. Employees means did not receive. Okay, so that's the same thing. So then end. So let's see what this clause is. So this one is saying that you weren't able to bring back your staff because you had to abide by OSHA standards and the health standards and everything. So what is all of this saying? And I'm kind of reading this in real time with you guys. So number one, if you don't have any employees, boom, you get to use this form. Number two, if you didn't reduce anybody's pay by more than 25%, you get to use this form. But if you did reduce their pay by more than 25%, as long as you replaced it by December 31, bring them back up by December 31, you get to use this form. And then it also says if you reduced your head count by 25%, as long as you replace it by December 31st, you're fine. But if you couldn't replace it because you couldn't find qualified people, don't even worry about December 31st. You're already fine. So this is huge. This certificate, I don't know if you guys can see what I'm highlighting. Yeah, right here. Perfect. This is your new go-to. Print this, post it, hang it on your mirror, read this daily. You guys need to be able to make whatever operational changes in your business to be able to check off one of these boxes. Because if you can check off one of these boxes, you can use this form. So I read this in real time with you guys on here. So I need to dive into this more and really get into the nitty gritty, and we'll do another video on it. But this is all around really positive news. We should all be very happy about these changes. It definitely seems like they made a concerted effort to listen to what business owners have been saying, and they took it and ran with it. And it's a good day. It is a good day. So there's still some unknowns. I would feel better if they had said, hey, if you're an S Corp business owner, 20,833 is your max for 24 weeks. I'm sure they'll clarify that soon. But for sole props, really good updates in here. And for all of you, just really good updates. So I encourage you to head over to treasury.gov and read it yourself. I also encourage you to come over to the Facebook group, The Profit Factor. Join in on the fun. We're in there having open dialogue about this basically 24/7, especially since I don't sleep much these days. So pop in with any questions you have, and there will be a lot of good information for you in there. And if you like this video, please like and subscribe. I am brand new to this YouTube game. I am brand new to all this tech and trying to get these little banners at the bottom of the screen and share my screen. And this is all brand new to me. So I'm still learning as I go, and I'm honestly just kind of winging it right now. But thank you for joining me, and we will talk soon.